And this is going to Tuesday and Wednesday. On the S&P, on the ES, at these previous highs on the daily chart, we had failed breakouts at high. So we dipped into the previous all-time highs, and then we had a daily close below. And then we had a second day where we dipped into a previous high, then we daily close below. And then we had an extension failure and had our big sell-off yesterday. It was a 20 handle leading us into gap fills below, and we filled all but one gap on the way down. Now, on the S&P, on the NASDAQ, the lows of the year to highs of the year defended as a support level. We are still in a long trend over the longer term time frames. But in the smaller time frames, we have not yet broken through the VIX's resistance levels. And that's the context here for starting off inside of our leading index, in our leading indices, or leading our markets that give us headwinds and tailwinds for our broad markets. Notice that the dollar is still inside of a weakness trade, and it's in an extension short. This is also true when we're thinking about this in relation to all of our other markets. And you can see here, the dollar correlations are still deeply negative over the 30 and 15 day for the indices, and the currencies and the precious metals. That's going to become important here in just a moment when we're looking at the metals. The dollar, has it ripped and broken through its shorts to signal a risk-off type of environment? Not yet. It has not. Now, there is a counter trend here that has defended, but even it completing its profit targets would not break the extension shorts. So the dollar still gives all of our negative correlations tailwinds. The VIX is still inside of a massive resistance level on the daily charts, on the weekly charts. Now, it is true here that there are counter trend longs from lows, and this is what helped create really our two sell-offs, our two big sell-offs that we've had here this week. But overnight, we ran right back up into a previous high. And while the longs from lows, the explosion support levels, have not broken, we did break through yesterday afternoon's highs to lows here. And we're trailing a resistance level on the VIX. And below these 1958s, and rounding up to 60 and then adding a tick, so 1965s, the indices can have a squeeze into the direction of our gap fill that we actually is above us this morning. And so let's look at that on the ES. Now you can see here that there's a long from lows, and then there's this old short from highs. And I'm really drawing these up to see where they are in relation to the VIX's setups. Notice how we're sitting right on top of the VIX's long from last week's lows to highs at the 50%. And although the ES was sloppy yesterday inside of that equivalent setup, notice where that high is, that 69.70. So the 1895 is 100% inverse of the ES's 69.70 50s here. Now, if the VIX were to continue to defend below these 1965s and fall deeper into this pullback to its line in the sand, what would the indices do? They would squeeze. And you can see here this long that we were drawing up in the morning, watching for participation for or from, has defended and is leading us into the direction of its target, which just happens to be yesterday's 4 o'clock close, which is the 69.89 50s. Now, as far as where this stream continues at emoneyaddict.com, the link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.